Right. Once again, you're welcome to this particular webinar tagged The Mindset of a Trader. Earlier, I asked just to find out exactly, what comes to your mind when you see a topic like this. And I had responses like the ideal traders' mindsets, psychology, and on and on and on like that. As traders, when we operate in the financial markets, when we speculate, particularly in this case on CFDs, on currencies, commodities, bonds, equities, whatever the case is, when we trade in this space, either you're a new trader or you're an experienced trader, there is a way you're supposed to look at the market. There is a way you're supposed to position your mind towards the market. There's a certain set of understanding that needs to run through your mind on a regular basis. I'm going to touch this in three simple parts as we go on today. And I hope that, you follow me and then we get to learn and share together. Don't forget that the Q&A section of the chat is open. So if you have any questions, you can always let me know. And I'm sure I can look into this for you. Now, the first part of this, when we talk about the mindset of a trader, one of the major aspects, one of the major aspects that we want to focus on is what I tag as the emotional control. How you behave when you trade can have a major impact on your profitability or performance in the market. And I looked at this topic. Yeah, we heard emotional control a couple of times where we hear fear and emotions like fear, greed, you know, and so many more. I mean, you have hope, different kinds of things that a lot of traders have heard over time. But I want to focus on, some aspects of this. The first thing I want to talk about, I don't want to go into just the emotional part of trading, but generally I want to talk about the difference between the bad trades and losing trades. And the reason why I put this under emotional control is when you understand that deeply, I think it does a lot to keep your emotions in check. What is the major difference between a bad trade and a losing trade? Every trader has losing trades. Everybody, be it a professional in the market, be it someone that is new, be it, we all have losing trades because you cannot win all the trades all the time. The part that we don't all have is the bad trade. A bad trade does not mean you lost money. Neither does a good trade mean you made money. That's not it. A bad trade is what most struggling traders focus on, or is what they mostly have on their hands. But winning traders avoid bad trades. You can't really always avoid losing trades, but of course, you can avoid bad trades. What exactly is a bad trade? A bad trade is a trade that has not or does not have a higher probability of success. That's how I would look at it. It carries high risk and it has a low probability of success. How do you know trades that have low probability of success? Simply, the technical trade, the fundamental driver. On the chart, on the technical side, you have the right setup based on established rules, based on your trading system, based on your trading plan. You have the right setup. But there's also something on the back end, right? The fundamentals, the stories, the developments, the catalysts, the drivers that is influencing that position you're about to take. That's how I look at a good trade. Now, or I look at a high probability trade. So, I mean, the whole plan, how you approach the market, finding out what's going on and driving the assets, the implication of that information, how you convert it into a trade idea, how you execute, how you manage your risk, manage your trades, all of that forms your process, forms, what you do on a daily basis. Now, when you add that to proper risk management, you have for yourself a high probability trade. Now, this high probability trade, right, that now has low risk is what I call a good trade. If you focus on taking good trades, you'll be fine eventually. I'm not saying that you would always win all of them because, I mean, you can't avoid a losing trade. You will have some. You cannot always 100% predict the market. You can be wrong sometimes. The market may not agree with you. You may be wrong in your analysis. Something new can change in the market. So you can't really always avoid having a losing trade. You will. But what you can avoid is having bad trades. What you can avoid is taking trades that you cannot explain the reason, the driver for it, and then the technical setup for it. If you avoid bad trades and you focus on taking good trades only, patient enough to wait for when those setups come up, and you take only those ones, as a trader, you're going to be fine. Because at the end of the day, good trades consistently taken increase the probability that you're correct, reduces the possibility that you have a lot of losing trades, and your account can grow. As a trader, you can grow your account and build. When you have this at the back of your mind, that you always focus on taking good trades, then fear and greed, reduces their impact on you. It does. So it's key. When we talk about emotions in trading, it's also important that we focus on the type of trade that we're taking. When you take the good trades, it reduces your risk in the market, reduces your emotional burden in the market. The second thing I want to touch, right, is as a trader, what's your relationship with risk? You see, a lot of times when people talk about trading psychology and emotional control, I always try to link it back to risk management. You have to. Risk management for me forms a big chunk of your trading psychology, of your, trading psychology in the market. What is your relationship with risk? How do you view risk? Do you view risk as the enemy, something you should never ever have? Or do you accept the risk inherent in trading and then you respect enough, to behave a certain way in the market? Are you a trader with high risk appetite? Or you're a trader with a low risk? Because you need to understand these things. If you don't understand these things, it becomes tougher for you to make better decisions. I believe strongly that with a strong or clear understanding of your relationship with risk, you can better control your emotions. You can. What is my relationship with risk? And how do you know your relationship with risk? I asked a few questions earlier. You cannot say you're a trader, you want to speculate in the financial market, you want to trade, but you don't want to take any risk. The main idea here is you want to make some profits, understanding that it also involves some elements of risk. And there's always going to be risk in every endeavor that you do. Trading is not any different. So it's there. There are different types of risks. There's market risk, there's trading risk, right? There are different sides of it. But the one I'm even talking about is the risk inherent with trading itself. That is the risk of loss. You can make a loss when you trade. You can. Every trade you take would end in one of three outcomes. Either you make a profit, you make a loss, or you break even. Every single trade. So a trader must understand this and accept it. You see, one of the reasons why, for some traders, the emotional part of their trading, their emotional control in trading is not balanced, or their emotions are not balanced when they trade, is because they have not accepted the risk inherent in trading. Now, I'm not saying it's so big, it's not avoidable, it's so big, you always take a loss. That's not what I'm saying. I'm saying when you accept your risk, it looks like I take a trade, I understand that this trade I can make a profit, I can make a loss, I can also break even. I understand that. And because I understand that, I have accepted these outcomes and accounted for it. I know that I would not take a trade that exposes my entire account without any measure of control. I know that if I take this trade and I'm not correct, prices don't go the way I expect, and I lose money on the trade, this is the expected amount I'm going to lose. I know that. I've accepted that. Once I've done that, there's little that fear can have on me. There's little. So when you accept that, and prices, the trade is running, price is not going the way you expect at this particular time, then you can relax. I mean, of course, you can take it, just relax. Why should you relax? You're relaxing because you already know the worst possible outcome, at least to some extent. You know that. And you've accepted that. You've looked at that potential loss and you've accounted for it and said, okay, if that happens, well, it's well within my control. It's something I'm willing to accept, something I'm okay with. It's within my risk parameters of my account, and you can let that go. But if you do not do that from the beginning, when you leave your trades running without that acceptance of the inherent risk, without that understanding of what is going on, and then you're in the trade, when price starts to move, when the market starts to move, it becomes a worry for you. Do you have a high risk appetite? Or do you have a low risk appetite? You must know this. For me, I have a low risk appetite, not super. I can take risk. I'm okay with taking risk, but I don't go trying to do the extraordinary with risk in the market. No. And that's for me. You may have a high risk appetite. But what I realized is for those that have higher risk appetite, if you're trying to manage risk too tightly, take tiny risk in the market, you get bored, you get frustrated. And those that have low risk appetite, if they're trying to take big risk in the market, they panic all the time, they're scared all the time, they worry so much, and they tamper with their trades too much. So you must know the class that you fall and approach accordingly. If you have a high risk appetite, you understand that the trade you want to take a big risk on it, a big lot, a big volume. You want to take a big buy, a big transaction size. You understand that if you're correct, you make a good sum of money. But if you're wrong, your loss will also be bigger and you're fine with it. I mean, you can approach like that. Just understand that you're trading with risk capital, money you don't want to lose. But if you lose it, you're going to be fine. But if you have a lower risk appetite, then I'm sorry, you cannot approach the markets that way. You have to make sure at all times you're staying within what's acceptable to you. And what's acceptable to you differs depending on your level, your account balance, your skill, and so on and so forth. But you must at all times keep your losses under control. You absolutely have to. Stop loss placement is key. Setting the appropriate volume or lot size is very key. You must trade the lot, the volume that fits your account balance, and not allow leverage, just trading on margin, just take you off balance and do what you know you're not supposed to be doing. I said, take note, get comfortable with taking risk in the market, keep greed and fear away, and then stick with your plan. Your plan is what your process, the steps, what you need to do every day or every time you're trading before you click on buy or sell. That's it. The next aspect of this that I want to touch is what I call in your mind as a trader, the ideal mindset the trader should have should be one that has a growth mindset. You have to have that. You cannot say you're a trader, you want to do this long term, you want to approach the market for a longer period of time, and you do not pay attention to this. You must keep this. What are the things that I have highlighted under this? Number one, maintain a positive, view of the market. You cannot be thinking that, oh, the market is not going to work, or somebody somewhere lurking around coming after me, oh, the broker is my problem, oh, the strategy is my problem, oh, my laptop is my problem. You cannot have all these negatives around you and expect to flourish when you trade. You must maintain a positive mindset, a a clear, positive mindset. I'm coming into the market today. I have, my plan in place. I know that if I follow the plan consistently, I will be fine. I know that I would not make money on all my trades. I am looking to make money most of the time. I understand that I could lose a trade or two. I understand that there are risks involved. I would manage my risk and keep trying. When the market knocks me down, I take a loss. I'm not giving up. I believe that I can get better. I keep improving. I keep learning. I keep forging ahead. You must do that because if you allow the weight of, all the negatives around you, what the naysayers, and then even your ability at that part in time to weigh on you, you would not be able to progress. It hampers your mind. Fear becomes part of it. Worries become a major part of it. But you must be optimistic. And I feel like this applies to every sphere of life. If you're going to pick any skill and go to get good at it, you must believe that you can get good at it and commit to doing it. If you have a positive mindset as relating to trading, that this is something I can do and do well, if I only do what I need to do, right? It will keep you motivated. It could keep you coming back to practice. But if you already feel like this doesn't work, nobody makes money in the market, hey, I cannot make profit. I've tried this for so long, it's not working. Instead of asking the questions, why is it not working? Then I'm sorry, it won't work. This second phrase is something I heard from my mentor, and I think I enjoyed it when he said it. He was also quoting someone else. I can't remember who he was quoting, but he said the right way that a trader should think is to be optimistic when he's winning. You have winning trades running, you have trades running, you're making a profit. You should be optimistic that this could continue going in my favor. And then when you're losing money, you should become pessimistic that this could get worse and look to close your losing trades sooner than allowing it to run. You see, the problem is a lot of traders have this the opposite. They are pessimistic when they are winning and then optimistic when they are losing. Now, I want you to listen. The right way should be that you're optimistic when you're winning and pessimistic when you're losing. But a lot of traders have it the other way around. They are pessimistic when they're winning. Price is going in their favor. They start to worry. Oh, this may change. This may reverse. This may not go the way you expect. Oh, price may reverse. Let me just take my profit. Closing their winning trades prematurely, worrying that the market will come back and take the profit they've already made. When they could have been, if markets move in the direction, maybe even adding to their positions and even enjoying the ride, they end up being so worried, they close out their winning positions. And then when they're losing money, that's when they're optimistic that, oh, let's hope it will reverse. They're optimistic that price will turn. There will be a turnaround in fortunes. It's just a pullback. Instead of objectively saying that you could have been wrong and cutting short your losses when you should based on your risk management parameters. I'm here to tell you today to change that. You should change that. You should come back, turn the tables on its head, and pay more positive attention to when you're winning and be more pessimistic, be more, weary when you're losing. So, for example, I take a trade, I'm making a profit on the trade. I already have my target set. I want to let the trade play out. I'm not worried and trying to jump out of the market, except if there's an objective reason why I should not be in the trades anymore, or I don't feel confident about the trade anymore, except in that case. But outside that, I should allow the trade play out. But if I'm in a losing position, of course, I'm not going to remove my stop loss and say, oh, let's just pull back some more. Price will still reverse. No, I already know that if it's not going the way I expect, something may be wrong. I'm not talking about just a little drawdown. I'm saying full-blown price moving against me. I want to get out of losing trades. I don't want to keep adding positions to my losing trades. So I'm buying. Price is going against me. Then I keep opening other buy positions at lower prices, at even maybe bigger volumes, hoping that when that one reverses, it will account for the initial losses I have. No, you're doing the same thing that is not working. You're buying, you're losing money, you're buying more, making it even worse because it's even bigger volumes. You must be optimistic when you're winning. And when you're losing, that's not the time to add positions. That's not the time to move your stop loss or even delete them. That's the time to get cut your losses short. Remember, you want to keep your losses under control. I hope this makes sense. Number 3 point I have, by the way, please don't forget that the Q&A section is open. So if you have questions during the course of our class, we're talking about the mindset of a trader, the trader's mindset, right? What you should have at the back of your mind, the way you're supposed to position your mind and think about the market when you trade. So if you have any questions during the course of this session, you can let me know in the Q&A section and I will attend to them as fast as I can. Please type it in so you don't forget the questions. When I'm done, I'll run through the questions and answer as many as I can. All right. Number 3 points I have under building a growth mindset is understand what you have control over and what you don't have control over. Now, this is key. This is key. There is nothing, that sets your mind right better than this understanding. Listen, there are things you cannot control. And there are things that you can control. If you try to ignore the things that are within your control and try to control the things that are out of your control, you don't get a desired result that you're looking for. What do you have control over? Your behavior in the market, your trading, your behavior, your approach to trading, your process, your analysis, your risk management, your trade management. These are the things you have control over. I can decide when I want to place a trade, when I don't place a trade. I can decide that. I have control over that. I have control over when I place a trade and when I don't place a trade. I have control over the risk I decide to take on my trades. I have control over when I close my positions. I have control over my emotions and what I choose to affect me. I have control over that. What I don't have control over, I don't have control over the market. I don't have control over price. You need to understand that. The market is not yours to control. You see, in a bit, if you think that you can, that's why you can feel like when I do my analysis, the market must conform to this because I should be buying, prices must go up. No, the market doesn't even care about you in the first place. So let's be clear on that. It doesn't even know you exist. It's not out to come for you. It's not looking for you. It's completely neutral. It doesn't care if you make money or lose money. Whether you were in that trade or not, the price would have still gone up. So it's not about you. When you understand this in the core of your mind, then you do not get too rigid with your trades. You become more flexible. You become more flexible. So I do my analysis. The point of analysis is to increase the probability that you're correct, not eliminate the possibility that you can be wrong. No. So I do my analysis. I understand based on X, Y, and Z, I expect prices to rise. But I also know that, I do not have control over the market. So the market may not agree with me. Something new could happen to change the scope I have or the bias I have about the market. Because of this understanding, I get to manage my risk. I do not hope and say that, oh, this is just a pullback. And when price is clearly not working, when the analysis is clearly not working, I do not get overly arrogant and feel like it will still go back because I've done my analysis. No, I understand that something could have changed and I adjust accordingly where necessary. I focus more on my process, which I have control over, on my risk management, which I have control over, on everything that I have control over, and not the things that I do not have control over. You have control over yourself, what you do, how you behave, your risk management, your trade management, your trading process, your emotions, but you don't have control over the market and price. So don't try to force the market to conform to what you do. Try to conform to the market and act accordingly. Number 4, I said build self-confidence. Now, this part is quite important. Although, before you get to the point where you can build self-confidence, you must have arranged certain things. Confidence doesn't just come on you. Confidence comes as a result of understanding what you're doing and then a bit of experience. Confidence comes from experience, understanding what you're doing, how it works. Of course, if you don't understand clearly how the market works, you're new. You've never really traded before. Now, there's a process to that. At HFM, we offer free training education to our clients. So our clients can access free trading education from the foundation level. And this runs either online or physical at our education centers, mostly in Lagos or Port Harcourt. Right. So you could join these classes. They're free. You don't get to pay for them. But it gets to set you right to understand what's going on and how best to approach the market. It sets that in motion. I'll give you the link to my chat after now. You can always reach out to me if you feel like, oh, you want to join the foundation class or get started. But you must understand these. When you understand how it works, it's not going to become, you're not going to get great at it the next day because trading is a skill. It takes time to master. It does. So as a trader, you should give yourself time to get good at it. Practice. Keep practicing. Keep pushing. Right? Every day you learn from experience. Don't give up. If it's not working the way you expect, find out why it didn't work. Make adjustments to your process and forge ahead. As every day goes by and you improve and you do better, your confidence starts to grow because you've seen these things happen before. The reason why you know to, you know, drive on a very highway is mostly because why you feel comfortable driving, even maybe at a faster speed on a highway, is because, I mean, it's not just because you know the theory of driving, it's because you have some experience in driving too. Someone that knows the theory, that has graduated from driving school, knows the theory of driving, but has not really driven on the express for long, would not have the kind of confidence that somebody else that have been doing that for a while would have. So confidence is not just going to happen, but you want to build it. Make sure you're intentional about it. And the way to build best confidence is to have done it 1,000 times before. I think whether it was a video I was watching or was a quote I was reading online about, I think maybe Kobe Bryant, one of these basketball legends, right? Now, what he said in that quote, it made a lot of sense to me. And what he said was that whenever he is, about to take maybe match winning shots, or maybe, there's so much pressure that this particular action you're about to take, right, could either make the game for your team or lose the game for your team, something like that, something really crucial. And he's about to throw the ball into the basket in basketball, right? The reason why he's able to do it without any, facet of fear, any panic, without thinking about it too much, and do it is because he has made that shot 1,000 times before in practice. It's not new to him. He's done it 1,000 times. That's why you see professional footballers too, when they're trying to take the last penalty in a major tournament, right? The best of players take it with nerves of steel. It's not because, oh, they just woke up one day and they're good. It's because they've done it 1,000 times before. In training, it's the same thing. When you're learning to trade and you're practicing, if you do it 1,000 times, you do it a lot of times, you grow from that. But you cannot assume that 1,000 times will not take time to master. It's going to take time. So, in the process of learning, having learned, you have to give yourself time to practice what you've learned. And that's why when you're trading, for you to be able to say you're good at trading, you need to give yourself a large sample size. That is, you have been trading for some time. But in every time you trade, find out what went wrong with the ones you lost, find out what went good with the ones you made, learn from that experience, and keep forging ahead. It just gets better. I said, note, you cannot fully predict the market, so be flexible. That you decide that you want to take a trade does not mean that price must behave in that way. Price should, based on the analysis, but you don't understand that price may not. So be flexible, be able to adjust, adapt when there's changes in the market conditions, price is not moving in your favor. Don't just, close your mind to the possibility that you could have been wrong. Be open-minded, be flexible, adjust your trading positions and apply that accordingly. The market is not out for you. So drop those conspiracy theories and focus on what's important. You and your approach, your mindset, your trading approach. Don't forget, the market is completely neutral. It's not about you. So why not focus on what you have control over and just leave the ones you don't have control over? By the way, the moment you place a trade, you don't have control over whether you make a profit or loss on that trade. You don't have control whether price rises or falls. What you have control over is how you manage the trade, whatever the situation is, and what you have done prior to placing that trade. These are the things that you should focus on. Number three, cultivate focus and consistency. I've said some of these things already, but I want to also maintain, just talk about them a little bit. You see, as a trader, there's no way to say it. In anything, let's even leave trading out of it. In anything you want to do, any skill you want to learn, any profession you want to do, you must be focused. We always admire those that are great in different spheres of life. We admire people that do great in these spheres of life, but you notice that they paid attention. I think it was also a video I was watching. I can't remember who said this, but I feel like it fits into the scenario right now. The video said, or the person was saying in the video, that you look at the richest people in the world, or you don't get rich by doing everything at the same time. You don't get rich by doing everything at the same time. You get rich, or let me not say rich, you get good at something. You don't get good at something by doing everything at the same time. No. Jack of all trades, master of none. You get good by doing one thing, or you get rich by doing one thing really well, paying heavy attention to it, learning everything there is to know about it. When you get great at that one thing, you become a master at that thing. You make good money out of that thing, then you can now start to branch out at the top. Now, the problem is for a lot of traders, we're trying to get good at everything at the same time. Today, you're trying this strategy. Tomorrow, you're trying another strategy. Next tomorrow, you're trying another strategy. And you keep going on and on and on and on like that. Now, that's a problem. Reason being, you don't really get to learn what you should know. But if you focus on one thing, one strategy, master it. Master it. So I feel like most of the time, another thing I want to also mention is for a lot of people and a lot of times, the strategy is not the problem. I think most of the time it's the approach to it that is the problem. So find a good strategy, simple enough that you understand that it works, you've tested, and you focus on that one. You keep trying. You don't trade today, do your research analysis today, and you don't do another one till 3 days or 4 days later. No, you consistently focus, pay attention. That's how you get good at it. And then when you do it consistently enough, focusing, laser focus, Dave Ramsey will say gazelle focus. When you focus on it like that, and you're serious with it, paying attention, trying everything you need to know, everything you need to do without one thing, of course, then as you grow and you get good at it, nothing much will start to surprise you anymore. Because consistency is everything, and it takes discipline to to be consistent. Discipline, I think discipline can be it can be a decision. I choose to be disciplined. I choose to do my analysis every day. I choose to focus on this particular strategy. I choose to build my understanding, learn everything there is to learn, practice this every day. It's a decision you have to make. One thing I noticed is, particularly when you're doing market analysis and research, when you miss a couple of days in analysis, when you don't do it for some days, when you come back, you probably feel out of depth. It happened to me sometime recently where we got busy with seminars and we're all over. So, we're going to a seminar in the city to meet with traders, discuss the market, all of that. When we're back, we're off to the next city. And then for like a couple of weeks, right, I was in that space. I wasn't really able to do more normal deep research like I would have loved to, just the regular one that I have to do to like help clients understand what's going on in the market. So I was not able to do deep research as such. I wasn't finding trading opportunities as much because I was even busy. I just run the analysis. This is what's going on post. I don't have time when I'm done or gone out in the day, trainings and then meeting with clients. I'm not able to focus back and check the trade ideas and all. So I wasn't able to do that. And then when we finished that round of seminars and we had to like settle a bit in the office, I just felt out of place. I just felt like I did not know what was going on. I was seeing the market. I'd done my analysis that morning, but I just felt like, where is this coming from? What I had to do was refrain from taking any trades and try to get back in the groove, try to get myself infused back into the market, understanding where all the stories developing have been coming from so that I can now forge ahead. The same thing applies to you. If you're trading, doing your research every day, because the stories are linked. If you do not consistently do that, when you miss a part of a particular time or period in the market, when you're back, don't just rush to jump in trade, taking trades. Try and catch up what you missed. Or you are using a particular strategy. Use it today. When you have the trade idea come up the next time, you don't take it. So you're only taking it once in a while. No, take it every time you see it. Every time you see it. That's how you can really know if it's working or not. But if you take it once in a while that you see it, it becomes a problem. Does this make sense? You must add consistency to your game. Continuous learning and adapting. Of course, I've mentioned adapting already, but I mean, you must continue to learn. There's no island of knowledge. There's no end to this. You must at all times continuously put in, effort to add new information to what you already have. There's a lot of resources. There are trainings, webinars, everything that we have at HFM. You can consistently learn and even try to read online. Just check. Make sure you're adding something new to what you already know every single day. I said, note, winning traders understand that even their best market analysis may sometimes not match with the future price movement. That's where adapting comes. That the market does not go in your favor does not mean you were wrong. You need to understand that it's not about just you. What your analysis have done is to give you the best possible idea, right? Take the best possible position you can take. But you must also remember that, come on, you can be wrong. You absolutely can be. So when you understand that, it helps you better adapt. It helps you better adapt, helps you better, flexible enough, right, to make adjustments where you should make adjustments. So in summary, when we talk about a trader's mindset, is one that focuses a lot on, consistency, discipline, continuous learning, pays attention to what it's doing, right? Is one that has a positive mindset, optimistic willingness to learn, optimistic when he's winning on trades, but obviously pessimistic when he's losing trades, understands what he can control, which is his process, his risk management, his ideology, his trade management, his emotions, and what he cannot control, the market, how prices react to his position. And then he focuses a lot on what he can control and then makes that or does that to the best of his ability. And then the focus on building confidence, which has to do with understanding how the market works and consistent practicing. A trader that must have the right mindset must control his emotions, know the difference between a bad trade and a losing trade. Stop focusing too much on losing trades because everybody has them. We just know how to keep them minimal and in smaller percentage in our total trades taken. But try to avoid bad trades, which are trades that you don't have a clear understanding of why price should move a certain way, that does not have a higher probability of making you a profit. The trader that must have the right mindset must understand his relationship with risk. You must. You must know your risk appetite. You must know your level as well in trading. You must understand what's your risk appetite and apply accordingly. And then the trader that must have the right mindset, that must keep his mindset firm, right on the goals, must manage their risk. They cannot afford to allow trades, run into big, big losses. They should not, right? I hope these things that we have talked about makes sense to us. I hope we have learned a thing or two. Now our time is running. Let me run through the questions that we have before we call it a day. All right, you're new here. Thank you, Mr. Austin. Thank you for joining us. You're welcome to HFM. My name is Heritage. Right. If you're new to trading in total, I'm going to send the link to my chat in the chat box before I'm done here. Right, you can let me know. We can get you started with the foundation course and get you going so we can know how we can help you improve. Yes, thank you. Yeah, the right trader must have discipline and resilience as well. The right trading mindset must involve those things, right? Discipline and resilience. Thank you. This one says, with low risk management, it is hard to make money. Is that true? Well, I don't think we'll call risk low risk appetite. I don't think that's the right word that I would use. Low risk, tiny risk, right? May not be the right word I would use. Proper risk management is a better way I would say it. So let your risk management fit into your balance. If you have a smaller amount of money, a very tiny amount of money, take risk fits into that balance. Now, if you now feel like that risk you're taking is now too small and it's not allowing you to make a lot of money, then you must understand that you can take bigger risks. But you know that we're taking bigger risks beyond what you normally should. You can make a lot of money, but you also understand that you can also lose the one you have because you're taking much bigger risk than you should. So, I mean, we need to understand that. So it's not about low risk. I said proper risk management. Take risk that is appropriate or that is, in line with your risk appetite. How do I change my mindset and be more positive when you're winning? I mean, I think we've mentioned this a lot of times in this particular class. How do you change your mindset and be more positive when you're winning? That's when you should be. I would think that when you're winning, you should come with excitement. It naturally should come with a positive, composure to it. What you just need to do is when you're winning, you have a trade is moving in your favor. Instead of panicking and just closing it out, manage the trade. You can move your stop loss to break even. You can take some profits off the table by closing parts of that trade, right? Just tighten up the trade, manage the trade better, and not just be, you know, so afraid that you just quickly run in and close the trade when it's moving the way you expect. Only close your trade when you feel like something has changed, when you feel like it's no longer moving the way you would like it to move, or when it gets to your target area that you already pre-specified. Please, sir, I always hear of fundamental and technical analysis. Nobody's talking about sentiment analysis. what do you think sentiment analysis is in trading? Now, a lot of people, when they mention this, they talk about sentiment and fundamentals in the same light. Sentiment analysis simply involves you paying attention to the mood of the market, the current disposition in the market, the current feeling in the market, how traders feel, risk on, positive, risk off, negative, how traders feel. Because depending on how the traders feel, right, it also affects the kind of assets they move their money into, what rises and what falls. So there's that. You could look at it that way. Now, we don't have all the time to go into sentiment analysis today, right? But you can always check with the foundation course. I'll drop my link now in the chat box. You can check with our foundation course. I think on Tuesdays mostly is when we talk about this. So you can catch up with that, and then we talk about sentiments in full. My chat, the link to my chat is now being sent to the chat box. So you can just send me a message if you have any message via this link. Click on the link and send me a message. I'm sure I can answer that questions to us. I can, you know, direct us to the right way to get things done, or whatever the case is. All right. So there you go. That's the link to my chat. All right. Let me quickly answer the rest questions very quickly. So we talk about that in our foundation course. Please join the foundation course, and then we can move from there. All right. This one says, um, what you have described is a serious problem that I have. I'm always pessimistic on winning trades and optimistic on losing trades. And then how do I change? I already told you, just switch it. When you're losing money on a trade, do not be too hopeful that it will reverse. Objectively look at it and understand that you can be wrong. Something will have changed. Price is not moving the way I expect it to move for one reason or the other. So what do I need to do? Where is my stop loss? At what point do I know that the losses have to be stopped, regardless of how I feel? You must decide that. Oh, price is moving in my favor, I'm making money. Instead of being pessimistic, be optimistic, be hopeful you should keep going in your favor. Don't be in a rush to close out the open position. Try to move your stop loss and move it to break even. Take partial profit off the table, right? Do the more, increase your positions in some cases, add more if you can. If price keeps going in your favor and your margin allows you to, right? So that's how you want to look at it, Mr. Okoro. Thank you. This one says, good afternoon. Please, is it possible to rewatch this episode later after the live? Yes, it's possible. I would also try to upload this on, our YouTube handle, and then you can always catch it. YouTube, if you get to YouTube, just search for HFM Nigeria. It will be posted later today that you can always catch that. All right. This also answers the same question. Where will we be able to access the recording? All right, it will be posted on our YouTube handle, HFM Nigeria. You can as well send us a message. Sorry, once it's posted later today, just catch it on HFM Nigeria. We'll post it up and then you can catch that. All right. I want to add my voice to being optimistic when winning and pessimistic when you're losing. I feel in this as I have closed a trade that I was winning early as a result of fear of losing the profits. And I've also failed to close a trade that I was losing being optimistic that it would turn. This is indeed the mindset that inexperienced traders face. Thank you very much. And I believe that we have also spoken extensively on this as well. That would help us just change. If you switch that, if you flip that switch, I'm sure you would have far better experiences when you trade, right? You should not try to add positions to your losing positions. Don't do that. You should focus more on adding positions to your winning positions. That's if your margin and your risk management allows. Move your stop loss to break even as fast as you can after price has moved well in your favor. Be more optimistic on that end and not on the other end. Thank you very much, Mr. Phoebe. All right, this one says, sort of question says, same thing you described is a big problem for me. For almost years trading now, I still get pessimistic on winning trades and optimistic on losing trades. I believe that I have just talked about this as well. I see that a lot of traders have this particular issue, right? And I'm glad we're able to bring it up today to see how we can, you know, um, help a lot of people out of this. We've mentioned that focus on things that we've said, and I'm sure you can see some changes as well. How can I overcome the fear of losing? How can a trader overcome the fear of losing? Now, I feel like the best way to overcome the fear of losing is to accept that it's part and parcel of the market and trading. It's part and parcel of it. You cannot avoid it. You will lose some. Your focus should be on making sure you win most, which has to do with trading properly and maintaining the right approach to trading. And then when you understand and accept that it's a possibility, also clearly determine how much you would lose if you're wrong. And if you do that, if you just do these two things I mentioned, you have a far better time. You have a far better time. Losses are a part of the game. They will come. Let's not pretend like they're not parts. They're parts. They are going to come. The best traders have losses. Like I said, your job is not to avoid losing trades, to avoid bad trades. So the best way is accept that it's going to come. And what do I need to do to keep it minimal? Take good trades. Follow your plan. Find high probability trades. Like if you do not know how to find high probability trades, of course, you can catch us with in the foundation course. We can run through that as well. But find high probability trades, right? That would help us. All right. And manage your risk, of course. I mean, if you manage your risk, you have a far better time because even if you're wrong and you take a loss, you already know how much you would lose on that trade and you've already accepted that fact. So you're good with that, and that can help you, right? Like I mentioned, it will be posted on YouTube. You can always catch that, or you send me a message later on. I can always send you the link to the YouTube handle, right? This one says, what exactly is strategy? Strategy is simply how you approach the market. Like, what do you do? Steps that you take to click on buy or sell. That's what strategy is about, right? And then there are different trading strategies. You can join the foundation course to learn more on this, right? How can you set a trading plan for yourself? Now, a trading plan is simply what you just need to do, before you place by yourself. The overall, game plan, what you are going to do. Strategy is how you do it, right? So, I mean, if you want to know how to develop a trading plan, you first need to know how trading works. Because when you know that, then you can know how you can establish the step-by-step plan. So I don't want to just tell you this and this and this without giving you the full information. So I'd like you to please join the foundation course so that you can understand, first of all, what we're supposed to do. And from that, we can now build a plan. All right, we need to run. Our time is up. For the questions I may not be able to answer, I'm going to be answering this class. Like you already have the link to my chat. You can always send me, a message. This one says, please, is there a video on divergence and how to use it on the HFM YouTube channel? I believe there should be. So you can just check HFM Global, just search HFM on YouTube and then just search. You should be able to see something on divergence, something on MACD, something on, you should be able to see divergence really. You should be able to see. And if you can't find it, you can let me know. I can see how I can check for that for you. All right, we're running. We're running. I may not be able to answer all the questions. I want to focus on the ones relating to this class, but the ones I can't answer at this time, you can always send me a message on that. All right. Um, can you please show us how to set up a demo account? Right, just please send me a message. I'll have somebody from the support department look into it for you and guide you step by step on that. Right, right there. All right, let me see. Good afternoon. Thank you for all the webinars. Please, you want to find out what are the procedures to taking a trade? By this, I mean, what are the step-by-step that you should take in placing a trade? Now, of course, I would need you to join the foundation course. It's free. It can be online, right? It runs Mondays to Wednesdays by 3 p.m. online. So just send me a chat. I can send you the link to that so you can learn that. I've already recorded a video on this as well and posted on our YouTube handle. That's the foundation course in general. So we can do that. We can't really do that in this particular webinar, but then you can let me know and I can guide you through the right place to get that done. All right. Please, I have learned fundamental analysis and sentiment analysis with a touch of technical analysis, but I'm still feeling inadequate to enter the market. What can I do? Start small. Start on a demo account. Practice. I said confidence comes with first understanding what you're doing, which you seem to have that understanding by saying you understand fundamental, sentiment, and technicals. But you need to practice because it's in the practicing that inadequacy feeling would fade away. So practice. Use the demo account to start practicing. And for every trade you take, keep a record. If you did not go the way you expect, try to find out why. Was I wrong in placing my stop loss at this level? Why did this not go the way I expected? Did I make something up? Find out and learn from that and make corrections. If it goes in your favor as well, try to remember the things that you did correctly, and then you start to grow from there. When you've done that for a while, open a live account, probably a sense account, put some small amount of money there for you to build your confidence despite being in the market. And when you do that, every time you learn from each experience in the market, you improve and you get better. All right. All right. I'm one of the ones seriously waiting for the training in Enugu State. I will really love to meet you. I pray I'll be with the team. I would be in Enugu come next week Saturday. So we have a seminar in Enugu. I'm coming with the team, myself, and other members of the team as well. And then I would love to see you, Mr. Tunde Precious. Please, when you come, let me know that you asked this question in a webinar on traders mindset, and I would surely remember that. It'll be good to have you. All right, this one says, when I close my trades, I did not allow the winning trades to run in fear associated when I allow it to run and later comes back to my entry. What do you do? Again, if I don't take some trades, it is associated with fear. And when I take trades, it's associated with the fear of missing out. What do I do? Well, when you have open trades running and it's going the way you'd like it to go, and you start to feel the fear of it being, closed out or price reversing and all of that, you can apply trade management. And some of the ways you can apply trade management would be number one, move your stop loss is movable. It's just that for a lot of traders, when they get started, they focus on moving the stop loss further away. I buy at 5, my stop loss is at 3. I'm buying. Price is going against me, then I'm moving my stop loss away from 3 to 1. That's not the kind of moving stop loss I'm talking about. I'm saying that price is moving against you. You don't move your stop loss away. You let it stay there because before you set it there, you already had your pre-analysis, understood why you're putting at that level. But I'm saying in the case where price is moving in your favor, reduce your stop loss. So it's moved from 5 to 7. Move your stop loss from 3 to 4. So that way you reduce your loss. In that case, if there's a reversal, it goes from 7 to 9. You can move your stop loss from 4 to like 5, or like even 5.5 or 6. So that way, even if there's a reversal, it closes you out at stop loss, but in profit. So you can do that. When I say add to your winning positions, I'm buying, price is going up. That's pulled back to a very key level. The bias is still intact. I can open another buy position as well, right? You can do that. Now, I wouldn't try to be increasing the lot size in that case because don't forget I'm getting higher. I don't want to be buying at high levels, right? Of course, you want to consider your risk, consider your margin, but you can add to your winning trades. I hope that helps. All right. The beginner link you promised to share, please don't forget. You need to send me a chat. I've sent the link to my chat. Send me a chat that you want to join the foundation course. So the link will be ready on Monday, but I can have your account managers reach out to you ahead, and then we can work towards that. All right, I think our time is really, 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 really. Let me see if I can. Now, I may not be able to answer all the questions, but the ones I can answer, let me see if I can. Let's wrap it up at this particular point. I would, take some other questions when you send them to me, right? You can always just send me the messages. So please, 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 for those of us that have questions that you want to ask more questions that I'm not able to attend to in this particular class, I've sent the link to my chat. That's also my phone number as well, is on the chat box. So click on the link. You also see my phone number there. You can reach out to me on Telegram as well on WhatsApp, and I can attend to all your questions. All your questions, right? So thank you very much. Because of our time, we can stay longer than this. Thank you very much for spending this time with me. I want to believe that we have learned something new in our class today. I want to believe that we have learned something new. So on that note, I want to say a very big thank you to everybody for joining us on this particular session, and I'll see us some other time. Do take care. Do enjoy the rest of your day. From the team, it's goodbye for now. Thank you.